What is up, guys? Welcome to another live session. Today is July 24th, 2020. More importantly, today's Friday. Thank God it's Friday. I got a cold one like last time. Let me take a sip. Can't beat a cold Coke. Cold Coke. It's not too late in the day for a Coke, or too early, depending on where you are. So we're gonna go over the trades of the week. As you can see, the major thing was gold to 1900. Now, we've come a long, long way for gold. Back in December 2019, I had a target of 1800, and we've clearly smashed that. And now we're at 1900 all week. I was pretty much saying 1900, 1900, 1900, and you can see, boom, it just went up to the upside. And so for me, I've been quite busy these past few weeks. So it's a lot of birthdays, weddings, and stuff. So I was just looking to be in and out of the markets, but you can see gold gave us various points of entry for this long. All we needed was a bullish close above 1850. Here's our level, right? And so here was a bullish closure, the first entry that you could have entered on, a nice bullish hammer on the 4-hour time frame. And then if you missed this entry, this other candle right here, also a nice bullish hammer, very long one to the bottom, short to the top, and then price jumped up. And if you still missed the entry, then you need to be on the charts more. But there are two key candles before the rally. Again, a lot of these commodities like their bullish hammers. Stocks, importantly, they also like the bullish hammer a lot as a continuation to go up. Because all a hammer represents is a retest on a smaller time frame and a rejection, which kind of tells you that price is looking to go higher. So, this candle basically tells you that sellers push down here, but buyers push back up. This one tells you sellers push down here, buyers push back up. And you can see during yesterday's session, we came pretty close to hitting 1900, but we officially hit it this morning. And I told members that, hey, if we break above 1900 yesterday, by all means, we can take the long back to 1921. And 1921 is the all-time high for gold. Okay, so just to show you the momentum, I mean, look at this weekly candle. This weekly candle is astronomical, and there's no best time than now for gold to do this because the dollar is very undervalued. In this pandemic, there's world war happening, potential world war happening in Asia between India and China and Australia and all them boys. And then on top of that, you have social unrest in certain countries, mainly the U.S., and you have an election coming up in November. So, gold moved 930 pips this week. From Sunday going today, 930 pips. So if you didn't take any trade within here, for me, I was risk aversive, especially with the choppiness. But these are all setups given to members. If you didn't make at least 10, 15, 30, 60 pips within this 900 pip move, then you are trading wrong. You are trading the wrong way. But luckily, we are here to help. So if you look to the left, you can see here's our gold signal. Here's one of the gold signals we had way back, targeting 1800. We clearly smashed that. So I'm gonna remove this. But if you look all the way to the left, you'll see the all-time high for gold at 1921, which was reached in 2011. Okay, so I'm pretty sure that'll be reached next week, maybe even on Monday, by Monday. And then after that, we can kind of reevaluate. We might make all-time highs. Obviously, a clear target after this one is 2000, a nice psychological level. But this is the all-time high for gold, guys. So we are really making history, and it's gonna pile on with the dollar index just completely melting. So with these sessions, I go over the trades we took this week, some of them, and then look for analysis for next week. That's the most important part. I don't trade Sundays, and I don't really trade Mondays either. So I feel like Friday is a good time to kind of prepare for next week. Preparing is the best way to succeed, right? If you prepare to fail, you fail to prepare. I mean, if you prepare to fail, you prepare to fail, right? So if you look at the Discord, if you haven't been on it, make sure you sign up. The link to the sign up is on the description of the video. And so I'm just going to go over the signals we call this week. And so again, this week was similar to last week where we had 4 trades. Technically 5 depending on when you got entries. But so we started off the week with Euro Dollar and GJ. So Euro Dollar buys. We'll quickly go over that. And actually yesterday I gave another Euro Dollar buy. Which is starting to play out now, but it's just too late in the day. So like the dollar, the euro has jumped up considerably this week, right? This is a huge move for the euro. We haven't seen this size of a candle since May, so it's a pretty big upside swing. And if you look at the 4 hour, here was the first long we took of the week. We got our first target, and we like to, during these market conditions in Portland, more specifically, we like to take profits at TP1, at least half. I've been taking just full profit. So we take profit and then we move stop loss to break even. So after this move, we got around 26, 27 pips. Price pulled back to our entry, and so we stopped out at break even for your partial position. For traders that are just getting TP1, you would have just got 25 pips, and then this thing jumped up, right? And so during yesterday's session, I noticed that we kind of created a double top at this area, and so all we were waiting for is price to break above this high in a bullish manner. And this candle was nice, but you can see it wasn't bullish candles we like to follow. There's two distinct candles we enter on for sells and buys, and so for buys, none of them appeared until later in the London session today. But it needs to clear these highs. So thankfully this morning this candle appeared, and so euro dollar will make its way up to 1.17, which is also a target I've been kind of harping on since the start of the week. So euro buys, if today was the session right now, I'd enter the trade for us. But Fridays I do not like to trade, especially after the afternoon portion of the day. Things get weird, spreads get crazy, and then oftentimes weird stuff happens over the weekend. Trump says a few things, and next thing you know, the market gaps down. So I don't want to handle any of that nonsense. But next week, I'm pretty sure we'll be somewhere around here on Monday, and can take the next lunge to 1.17. Just looking at the daily, you'll see straight buys for the euro, right? Straight buys. So if you had anyone calling shorts, I mean, pending shorts is one thing, because there could have been a pending short. We clear this low, but if there's anyone trying to short euro dollar, they might need a psych eval, because it's look, 1, 2, 3, 4, 5, 6 days of buying, clear uptrend, weak dollar. Even the daily closure today is a nice bullish hammer. I do think we will go to 1.17. Hopefully the Forex markets don't move too much on Monday, Sunday and Monday, and give us entry during New York. So this is one of the trades. The other one was a intraday trade for pound yen. It was very similar to the type of setups we've been trading. It's very choppy, right? The markets are very choppy. So here was a trade in its entirety from right here. So you can see we got TP1, which is this right here, which is a nice 25 pip gain, right? And so we went down here. We actually went a bit further than TP1 for the members that took it, and then price reversed. But again, I kind of honed in on everyone. TP1 was hit, stopped at break even, and I even said this yesterday. During these market conditions, I highly recommend securing profit at TP1. I have an intraday style with a few swings thrown in there, and because of the choppiness of the markets, they're doing deeper retraces, and so usually we'd be fine where the market structure would be like, for example, let's say we enter short from here, right? So let's say we enter short from this level. If we go short, this is during usual conditions, okay? We'd hit TP1 here, okay? So this would be TP1 at 25 pips. And what price would do is either continue going down, right, to TP2, TP3, or it's going to spend some time relaxing here, relaxing here. It might wick up a bit and then finally continue going down, right? But during these conditions, for sells and buys, after TP1, after this first 25 guaranteed pips, price likes to do one of these moves. Go right to a stop loss, and either do a trend shift or then continue just going down, right? So they're running stops. IT has a good video on it, but for us, I just think it's the best way to trade right now. It's getting those 25 pips. You get 25 pips a day. That's 125 for the week. That's pretty dang good, right? Considering the fact that most, aka 90% of traders, don't make profit, and you can walk away with a guaranteed 125 a week. That's really good to do. You will definitely grow your account very nicely at that pace. So that's what we've been doing. And for GJ, you can see now we're looking for buys. We're in our kind of buy zone. So yesterday I also called a buy for GJ. So if you look at it right here, right? So I called for a buy, and The reason why I called off the buy is very simple because GJ likes to do these deep retraces, right? Even though it's an uptrend, and actually I'll show you on the 4-hour time frame. So I called a buy here, right? Because we had a nice 4-hour bullish candle above, and so we went into around 10-15 pips of profit, and then price pulled back and then went up again. Okay, and then you can see it kind of created a double top on a smaller time frame, and a double top is a pretty decent pattern to trade. It's one of the higher probability setups. It's a double top, and so once I saw that, I knew we had to get out, and so I got us out at I think negative 27 pips. That's perfectly fine considering price ended up going to our predetermined stop loss of 60 pips. So we cut our loss in half just by thinking smart on the spot, right? But even then, I'm not bearish on GJ just yet, because if you look at the daily, these type of retraces are normal. You can see here we've had a rally, we had a retrace of around similar size as the one today. So I'm still looking for buys, and it's very common for even in a downtrend for GJ to have these huge rallies up before a sell-off down, a huge rally up before a sell-off down. It's a very volatile pair, so it's not for the weak. You can't have itty bitty cute stop losses or not use risk management, because you will get burnt. As long as you trade with the trend and the momentum, GJ and the pound pairs will reward you. And then the last trade we took was Euro CAD, a simple intraday short as well. And this made up the loss we got for GJ. So once we took the loss for GJ on purpose, we entered short for Euro CAD, and we got our first TP of again 25 pips secured on the spot. And you'll see we actually went a bit further, all the way to around 40 pips. But for me, TP1 is done and dusted. I'm out of the markets. And even yesterday, we gave a potential long idea for EuroCAD, and you can see we're already in some profit. And the candle that you enter on is simple, a 4-hour bullish candle. Well, you get a bullish hammer anywhere above this resistance, price tends to go to the upside. So you can see here, yesterday we had that closure, we went to some drawdown, and price finally launched. All to say, Euro had fantastic PMI data. Other than the flash manufacturing, which was a bit lower, everything else was green across the board, even for the pound pairs. And so this is one of the reasons why we wanted to long euro dollar in the first place, because of the bullish forecast, right? And now the other trade I called last night was for Aussie dollar short, and I'm gonna hold this over the weekend. It's a very tight, it's a very low risk trade, right? So here's the trade. The stop loss is 25 pips, so it's nothing major, and we're about 13 pips in drawdown. I do think it's a downtrend for the Aussie. I think we'll go lower, and I don't mind holding this over the weekend, to be honest. But this is one trade we're going to be carrying over for the first time in a while. I mentioned it this week that the markets are kind of getting back to mojo, and they're not as choppy as they were. They're trending again. At least since Wednesday, they've been trending. So we should have some better market conditions, and I think Aussie dollar will go lower. But again, with the 25 pip stop loss and risking 1% per trade, it's really not a big deal to hold over the weekend. At this point of the session, I'd start taking questions and just go over a few things. So for those on YouTube, send them now. I know some people on Discord have a few questions, so I'll get to them first, and then I'll get to you guys as well. So let me just say hi to people on YouTube really quickly. Nice. Wendy Taylor Hill says, I bought it yesterday. It made 100 pips. I believe you're talking about gold. That's damn awesome. It's incredible. So let's see. Let's see what pairs people want to see today. Really quickly. Oh, okay, we got pairs there. Usually I don't get them there. I get here. Alright, so let's see. We have euro, pound, pound dollar, pound yen, and oil. Okay, great. We'll get a look at those, and then we'll move on to everything else. Okay, so we'll look at euro pound. And so euro pound, we had a possible short. I wanted to call it, but I did not. Thank God I didn't, because the only reason I kind of didn't want to take this trade because euro and pound were on two different levels, right? So all week euro pound has gained. I mean euro dollar, right? Euro USD has gained. Where pound dollar, it did gain on the dollar a bit, but it also had moments of weakness. So I wasn't too convinced that the pound would overtake the euro. In that regard, I kind of skipped on this trade. Although I gave the analysis, I just didn't feel comfortable shorting it, right? So this trade was skipped on, but you can see, I discussed it yesterday, that this will probably still be a short. I mean, we're still kind of making these, triple tops. We're being capped by this resistance at 0.91300, and so I do think price wants to go lower. It's just going to be choppy, especially because it's a tug of war between euro and the pound. But if you just move this over, you'll see that if price does dip down below, you can take the same short. But because of the disparity between euro and pound, I'd rather go euro pound long, because the euro seems a lot more bullish, and the pound seems a lot more bearish. So it would make sense to take this trade, but just from a technical standpoint, it does look, bearish, right? There is a chance to short it. Whether we break down here or we break down below this previous low level, whatever the case may be. But it's not really the greatest setup out there. I'm pretty sure there's a bit more decisive pairs, right? The golds, the silvers, the yens of the world, but euro pound is a type of setup that you trade, either you don't trade. So I never really been a too big of a player in it, but I know it relies heavily on the correlation between euro dollar strength and pound dollar strength. And so if euro dollar is having a great week, you won't get any movement. If pound dollar is having a great week, you might not still get movement, because when the pound's doing great, the euro tends to do great. And so it's kind of it's iffy trade to take. It's very similar to taking like a USD CAD trade, right? Where you have the dollar doing great as well as the loonie. You're not really going to get much movement either way, and so it's better to kind of either trade only dollar or only CAD and just stay out of that combination. So we'll let these two little brothers, big brother and little brother, euro being big brother, just, dish it out, throw their hammers, throw their swings, and then determine who comes out on top. I think once we break on either end, we'll get a nice trade. The top is at 0.91300. The bottom is at 0.9300. So a 100 pip range. Once we break out of it, we'll have a good idea of where it's headed. But until then, I don't think I want to touch this at all. Pound dollar. So let's look at the pound, little brother. I'll show you what I mean. So, if you look at pounds uptrend, if you just look at this, keep this picture in mind, and then compare it to pound, the euro dollar uptrend this week, you'll see night and day, right? It's completely night and day. You notice the retraces are a lot smaller, as with pound dollar, they're a lot bigger retraces during this uptrend. It's still an uptrend. Again, the dollar is very weak, and the dollar index got absolutely mugged this week, absolutely mugged. And this is the target we had for pound dollar, right? So this was, what date was this? This was on the 21st of, actually here, this was on the 20th of July. So on Monday, turning into Sunday, yeah, we had a goal of 128 for pound Aussie, right? I mean pound dollar. You can see price went up halfway, then did a deep retrace all the way past the entry, then pulled back up, and then finally went up. So, if you were to take this trade, this is how the market's kind of moving. So let's say we are waiting for resistance to break. You enter long here, right? If you were to enter long here, right? Most people keep their stop loss maybe somewhere here, maybe a bit below, right? Somewhere there. So price jumps up, it goes maybe 60% of the way there, and most people would take some profits off the table and move stops to entry, and then price comes in, stops you out at break even, pulls back in, consolidates, and then finally goes up to your target. So that's how kind of the markets are. It's not really, at least for GU, it's not really moving too clean. Usually when you have momentum with GU, it doesn't look back. right? It just doesn't look back. And if it does retrace, they're normal retraces with your fib levels. It's nothing anything too crazy like this, right? Like this. This is a pretty deep retrace. So GU to 1.28. Now that was the last significant high we made for GU back in June. So this is a key level to watch out for because GU has large upside potential. I think it has greater upside potential than the euro. Just because the euro has a few levels it needs to break, but if you look at the weekly, you'll see that GU can go all the way up to here, 133, right? If you look at the trading range that we're in for GU, from here to here, we have all this liquidity that we need to go up and grab, and that can jump up and get, right? All this price action, and that's how we trade too, right? So we just look for where price action has gone once it came off a certain level, and this 1.33 level is the level we need to watch out for. And you can see last time around when we were here in June, we had a bearish inverted hammer, and then price sold off. This time around, we have a nice thick bullish candle, a bullish hammer. So the momentum is far different when we approach this high. It's far different. We have way more buyers, and usually when you have these big blocky bullish hammers, you have price excel to the upside. So I'm bullish on this. I think next week we're gonna wait for the break above 1.28 and then target 1.33. And then this is, if you're a swing trader or a value investor, and you don't mind a deep stop loss, but a high upside target, and you don't mind drawdown, here's a setup for you. 2.4 R2R. Now the stop loss is 200 pips, but also the take profit is over 530. So that's an option for you, but we'll probably get a cleaner setup. But this is, even looking at it as bleak and blank and simple as possible, this is a really good setup to take. So I think that's where it's headed. The dollar is pretty much done for, I think. It's pretty bullish, but I didn't know there was going to be a pandemic back in December. Oh well. So that's what I have for GU. It could have a really nice push all the way up to here. And this is on the weekly time frame. So if you even go to the monthly, you'll see just how simple the idea breaks down to, right? Here's a clean support. Here's that low we made during the pandemic, but buyers pushed all the way back up. At the same time, we kind of had Brexit talks ongoing. And now price is surging back up. So I do think 1.33 is not a exaggerated target at all. It's definitely one you can look for. And then anything after that is just a bonus. It's just a cherry on the top. Thank you for that. And I'll see. I don't like to save and send chart work on Fridays because people think I'm telling them to enter now, especially new members that join on the weekend. So I'll send it on Monday. If you're starting to level up your trading, you should get used to kind of skipping Sundays and part of Monday as a trading day. You'll notice you'll spend a lot less time in drawdown, a lot less losses, and all that good stuff. Pound yen. So while I go through this, make sure you send me your recommendations. That way, I can get through them all at once. Pound yen, very similar. So if you just look at you can literally break it down like this. Looks very similar to GU, and I said this, I've been saying for a few weeks now. Wherever GU goes, GJ will go, and usually the correlation is weak or strong depending on the market structure. But these days, the majors are completely dictating where the minors go. It's almost like a one-to-one correlation. And so even with GJ, you can have a bullish bias, right? It's not as aggressive as a GU because technically speaking, we are still in a downtrend. I just draw a simple trend line. We are in a downtrend, right? We're making consecutive higher highs and higher lows. Lower highs and lower lows. And even this recent high, if you look at it, it's very sneaky. So this high we made back in December 2019, it did not clear the previous high made in March 2019. So, okay, although it's a high, it did not clear the previous high. So this is still a new lower high. This is a new lower low right here, okay? So this could be the creation. We can come up to this trend line, make a new lower high, and then price could dip all the way back down below to create a new low. So we can go up here, and that's still a lot of pips. Don't get me wrong. And then we can finally continue down. So, it might be a fundamental event that triggers this downpour, World War III, a new corona, whatever it may be. But in terms of that, in terms of technicals, the upside isn't as dashing as GU is, but still a lot to be made. Now, if we just look at a potential trade or deal, let's see if we have one. It's a riskier trade to go all the way up here. One of the reasons why is because this support at 128.300, 128.300 on the monthly time frame. You can see this was the kind of the meltdown during wave 1 of the corona. Then price jumped up. Since then, we haven't really given it a real attempt again, and so we're kind of floating above this secondary support. Now that worries me because you usually want to see multiple attempts at a level before you go long. If we identify it on the weekly, you'll see that we have a support that we have, and so maybe we can use that as a stop loss. So here's that support I'm talking about. Right here, right here's that support, and if you extend it over, you'll see why it's there. Right, so we have a rally here, potential sell-off, but then a rally back up, and then a rally once again this week. So based on this, you could go long. It's just very, very hard to get a high probable setup. But we can fix that really easily. All we have to do is clear the latest significant high. And the latest significant high was made on June 15th. These two bad boys here. So what we can do is wait for price to make its way to these highs, close above it, and then go long. Okay, and if we just look to the left, you can see this high aligns with some minor support in the past before we launched up, right? So you can see price came from this support, came up here to this level, built up contracts, accumulated contracts, consolidated, and then rallied all the way up. And this time around, we're looking for price to do the same thing, come up here, and then we get a bullish reaction when you go long. So that will be the best way to get a high probable setup for this up here. Okay? And the stop loss will be very, very tight. It'll be a very nice setup to take. So like something like this is not bad, 2.515, and then you can even adjust it a bit more. TradingView these days won't let me move my stop loss. I don't know why, it's weird. Yeah, it's fine. 3.0 R2R, your stop loss is gonna be around 130, but if you look at the upside, it's over 300 pips. So that's the type of setup you can take where you kind of put it in and you forget about it. Obviously, once we get to the daily and 4 hour, we can make a very whole different intraday setup. But that's what we need to do. Even on the daily, you can see this level is key, that we need to break it. Otherwise, nothing will happen. So it's going to be very crucial that we get that break above 139.650. Okay, guys, 139.650. All right, so next, someone asked oil. Okay, so oil is so oil. I just want to check oil. So oil is in a, I don't want to say troublesome, but it is very consolidated. So let me show you guys. And it's not consolidated in the traditional sense. It's kind of indecisive in what it wants to do. So if I show you, it's it's just chugging along. It's not really, look at these candles, for example, on the start of July. I don't know if it was hung over from 4th of July, but this thing, look, we have a daily candle. It's bearish, bullish, bearish, bullish. Mini rally, then bearish. I mean, it's cute. It's nice and cute, but it doesn't really do much for us. We wanted to go long because, again, we were bullish on silver and gold since the start of the week, since actually last week. And in that case, we are also bullish on oil, but oil just didn't have any juice. It's, I don't know what happened. Oil doesn't have any gas. Can you imagine that? Oil does not have any gas. I mean, I'm not asking it to be a GTR or anything, but I do want this thing to at least drive above 4250, and it doesn't want to do it. So I spent the 4 days out of this week just hovering below it, and until we break it, I'm not too interested in going long, just because 4250 was the recent high we made. And so for this pair, it's just a wait and see thing, And what's crazy about oil is because a lot of the fundamental stuff, especially with the Russia and Saudi Arabia, has kind of calmed down, so it should jump up, especially with economies reopening. But My preference and trade idea for oil still stands, and the stop loss is a bit exaggerated because it's doing these deep retraces like this one, for some reason. So I'm just gonna make sure we have enough breathing room for that. But it's still at 2.7 R2R, and it's in a logical place. I'm not too hung up on getting a 2.0 R2R setup. As long as the stop loss is in a logical place and it's, relatively conservative, we should go ahead and enter. So U.S. oil, my overall target is $48 an ounce. You can take profit at $45 an ounce, 47, 46, etc. But that's the final target. So let's see what happens. We're still in an uptrend, so that's why I'm giving you this bias. It's just a matter of when. That's all. It's just a matter of when. Yeah, that's about it. So that's oil. Pretty boring. Obviously, you can see since June, this thing kind of squeezed in and turned to very, very choppy compared to before June, where we had nice, clean rallies, either up or down. So we're just gonna have to deal with that. So, other lasting questions, let me know. I'll go through some pair recommendations, or just some pairs I want to look at. Okay, so hey Wendy, gold we just looked at, perfect. Can you give your analysis on pound NZD? Sure thing. And then I'll do some other analysis for all these members. So pound NZD, let's take a look. So I'm gonna get a clear kind of eye on pound NZD. We haven't traded this pair since 2019, so a lot of the levels are old and all over the place. So let's quickly. So this is pound NZD. Let's take a note of where price opened. Price opened up here in 2002, all the way up here. Since then, it's been on a long-term downtrend. Okay, let's keep that in mind. And then all I'm gonna do is just identify my key levels on the monthly and see what price can do. So I'm gonna go ahead and get a. No, I don't want it this big. Jesus, trading view. Like for trading view these days, it either lets me go this small or this big. It doesn't let me do it in between option. What's wrong? That's fine. So might be my mouse. Dang it too much. So here's our support zone. I'm gonna leave it like this and just extend it over. Right like that. So here's the support zone. These two wicks on the weekly. Okay. These are two wicks on the weekly you need to watch out for. It's obviously we have a nice bullish hammer right here, and that should be a good sign to go long. Let's see how the daily looks. So here we go on the daily. We have a perfect place to go long. Okay. So if you look on the daily, you'll see we had a nice clean downtrend in May. So before May, like during May, price action was nice and clean, right? But there's nice steady moves down, and then once we came to around July, things became a lot more choppy. Okay. So if we do this, I'm just going to draw this trend line right here, just for a simple fact of outlining the highs, the significant highs. So the significant high we had were these highs right here, so I'm going to label that. And Jesus, come on, trading view, what's wrong? So here's a significant high we've had, okay? And I'm actually going to adjust it for the candle we made just a few days ago. And this is the latest significant high, right? This one right here. So all we're going to do is, and since we're on the daily, all we're going to do is wait for a daily closure above the significant high. And significant high is at 1.93150. If we get that, I'm pretty sure we can have a nice long. And all I'm going to do for my take profits is identify the highs of the downtrend as a target. So this, and then finally this. So here's your trade idea. Here's TP2, TP1 actually. Here's TP2 right here. Okay, and then TP3 will be this support that we drew up on the higher time frame. So this is your long idea, and my stop loss is always in between this line and this line, which is the previous range, or the range that we're going to leave, right? So we're about to enter a new range, and we're going to leave this range, right? So we put our stop loss halfway in this range, because logically, if you think about it, right, here's our range. My goodness, man, I think TradingView hates my mouse. My God. Okay, so here's our trading range, right? The one we're currently in. Now, if we break out of it, right? We break out of it. If price makes its way back in halfway into this range, then more likely than not, it's going to continue going lower. That's why we always wear a stop loss halfway in between the range. And if you look at it, it's also below the, there's some minor support right here, right? This is some minor support here. So if price does come all the way down below here, then most likely than not, it's going to continue going lower, okay? So we're going to cut our losses very short. So let me just show you what the overall trade idea will look like and what you can have for next week. So here's our entry. Here's a stop loss. Here's our take profit. And now you have a nice 2.0 R2R setup. Now, mind you, pound NZD is very volatile, so it's going to be this way. We have a wider stop loss, but for us, we like to get 25 pips for sure. So even then, you can get 25 pips and then forget about it and just let this trade run and do its course. But this is a decent setup considering the fact that you have all this upside potential, and it could be a bullish sentiment for the pound. Reminder, we are bullish on pound dollar, and therefore if we're bullish on pound dollar, pound NZD might also go up to the upside because the majors are influencing the minors very heavily this year. So that's a pound NZD. Alright, so anything else? Let me just double check everything. I tend to miss out on people. And I advise you to enter this on Monday when market conditions are nice and clear, maybe Monday evening in London. Okay, awesome. Glad that helped. And then CAD yen, and then I'll finish off maybe BTC or SP 500. So CAD yen, oh my God, this thing needs to stop. It's still consolidated. So if you just look, we do this on a daily. If I extend it over, you'll see since June 11th, we've spent almost 7 weeks in this box. Since June 11th going into now, we've spent all of 7 weeks in this box. And now earlier this week, we tried to go to the upside, but again, you have to look at the candles, right? This is not a bullish candle we like to follow. We want a bullish hammer or just a bullish candle with no wicks, and this is not it. So this is a fake out. A lot of beginner traders got faked out. Okay? Just because there's consolidation, you get a breakout, does not mean you enter the trade long. You have to see what type of candle it is, because that candle will tell you what happened on a small time frame. So you can see this is a classic fake out. Beginners went long and then they got stopped out immediately, and it's very important you watch for the candle closure. Okay, so if we had a candle like this, right, or these two bullish hammers outside here, we would have probably went all the way up to here. But since we don't have that for CAD yen, I still have no bias because I'm waiting for a proper break above or a proper break below. I was waiting for the proper break below, a few weeks back, its target of 290 pips, but price is just consolidating, so I can't really give too much, but it's a good example that we looked at because this is a classic fake out. And even though it's on a daily time frame and people rely on the higher time frame, you have to look at the price action, because if the candles aren't telling the story or they're telling a false story, you will get faked. And I bet you a lot of people got faked out on this candle, because a lot of people know about consolidation blocks. It's nothing new, but when they trade the breakouts, they don't look at the candle that's the breakout candle, right? It's very important you do that. Now, people that enter this trade, they might have gotten lucky if they use risk management properly and they manage trades. So here was a 4-hour hammer, right? And if you entered on this, you have to realize that once you get this move, right? Once you get this move, you got 16 pips and then price pulled back on you. And then when you see price, this is another pattern we used to get out. So let's say we were looking for this trade to enter long, okay? And we went up to 16 pips in profit and then price pulled back. This is very similar to GJ. Hope you guys watch this. This is an inside bar pattern right here. This was your signal to get out, okay? This was your signal to get out. Here you have the key candle you need to watch out for. This one right here, this black bearish candle, this, right? Then you have this bullish candle, and then you have this bearish candle. And this is an inside bar pattern for a downtrend. If you get this, this tends to mean that a downtrend will commence. And you could have got out here maybe at what, 15 pips drawdown in a loss. Let's see if you entered up here. You would have got out at 26 pips. That's fine compared to the 50, 60, or whatever pip loss you would have had. This is very similar to GJ because midweek the pound, the yen gained a lot of strength, and so this flipped. And so it's all about trade management, right? If you play the probabilities, 8 times out of 10, this trade will go to the upside, okay? But also, those 2 losses you would get, you need to watch out for things like this, or bearish engulfing candles, or dark cloud covers to get out early and to minimize your losses. That's all it's about. So that's nice. I think I'll look at BTC really quickly. BTC is boring, so I don't think it'll take too long to look at SPS, SP 500, and then end off the session. At the end of the session, I'll give off a 50% off coupon code for those that want to join these sessions, because we only hold 1 free session a week, and that's on Friday. And we don't really enter any trades. We just do a general analysis. So let's look at BTC. And so BTC is doing the same thing. So we have a potential short idea, and we're only taking this short if price gets down below 8,500, which it hasn't yet, right? It hasn't yet. It's still floating in around 9,500. It might make another 10,500, and unless it breaks 10,500, I'm still bearish. I'm still waiting for a price to come back down below 8,500 to take a short all the way down. Let me just show you on the weekly. This is the weekly. You can see the consolidation over the course of many weeks. And so this is why I'm thinking we'll head lower. Remember last time around at the start of the year, we had a nice short for year. Went perfectly as planned. So pretty boring. Can't do much with BTC other than buy it and just hope it goes higher, really. I think most people are buying instead of trading because buying is a headache right now. SPX, let's look at that. SP 500, and then we'll finish it off. So SP 500, here's my trade idea, and you can see our first target of 3,250 has been reached. I have an overall target of 3,500, and this price action strategy works for any market. Options, commodities, indices, futures, all of that good stuff, stocks, crypto, and obviously Forex. So 3,500 looks good. We have 3,250. The next target is 3,400, which is the high we made before the world went to complete, trash, right here in February. So that's all fine. And so if you like the session, which I hope you did, and you want to gain in on every session, let me actually show you what we're all about. So if you go to our website, forexlens.com, and I'll just show you the pricing, and you guys will understand the content you're getting. Right, so the apprentice, it's a 7-day risk-free trial. You get full trading room access, which means you get all of my live sessions Monday through Friday. You also get live London sessions by Institute Trader, which are about smart money concepts. Very, very recommend those. And then you also get a bunch of trade analysis from 10 plus signal providers, right? You have access to pro trading tools. So we have things in our portal, position size calculator. You even have educational content. All that good stuff. Now you see it's $147 a month, but with the coupon code I'm going to give you, you're going to get it off for 50% for your first month. And believe me, this content people are charging thousands for, and we feel that's completely unnecessary. Our traders do well by trading, so we don't charge people that type of price. We know it's a fair price, and the content you're going to get is unmatched. So if you want to join, here's the coupon code. It's a very simple one. It's first 50, and all you do is you go to forexlens.com. Scroll up, go to Forex Trading Room, click Get Started. You fill out this form, it'll take a second, click Next, and then you'll see Enter Coupon Code near the bottom. You enter this, your first month will be 50% off, and believe me, your mind will be blown. You won't get this content anywhere else, and I believe that you'll get at least, even if you're an advanced trader, you'll at least get something worth knowing, okay? And that's it, guys. So once again, join our Discord. That's the place to be. We talk about trading. We also talk about life in general. We have certain channels for that, and it's completely free. So sign up. Link in the description. Leave a like and comment, and we'll see you guys on Monday. Have a great weekend. Peace.